There are differences between the two reports. There's a foreign bank account report that has been around for a while, and more recently the FATCA Form 8938 has been required up through 2015 for, really 2011 through 2015 was the FATCA form required for individuals up until now. Starting in 2016, corporations and other partnerships and certain trusts may also have to file that form where they have not in the past. But previously, the foreign bank account report was required for taxpayers that had assets or bank accounts where they had signature authority or control over accounts totaling more than $10,000. Fast forwarding to the FATCA Act, that's a different level of assets. Singles, married filing separate, U.S. residents and citizens have a threshold of $50,000 as of the end of the year, or $75,000 at any point during the year, whereas married taxpayers double those limits. Certain non-residents that are outside the country also double those limits even further. So it's the difference really is the threshold where these forms are required. So the consequences for not preparing these forms on an originally filed return are penalties. In some cases $10,000, in some cases as high as $50,000. There's also penalties for not reporting income, and those can be 40% of the income tax. So it's very important to include these forms on originally filed returns. That's the best plan of action. Please talk to your CRI tax advisor to make sure, if there's any question, that you're putting the right things on your returns. Taxpayers have options at the IRS and through the IRS for offshore voluntary disclosures, and there are also new streamlined procedures that can be very helpful in minimizing some of the offshore penalties that are out there, sometimes as low as 5% of the account value. Once you're notified by the IRS, it's very tough to get into these disclosure programs. In fact, it's almost impossible. So if you think it's an issue and you haven't filed these information reports on your original returns, then you need to talk to your advisor about potentially going into one of these offshore disclosure programs. For example, if you are a U.S. citizen that owns 100% of a foreign company, and you can also sign that bank account for that company, you'd be required to file the foreign bank account report, the FATCA disclosure, and then also a separate form which includes all the information for that corporation.